In this video, I'm going to show you how you allocate the cost of a purchase of more than one non-current or long-term asset. In this example, the Dalai Lama paid $700,000 and it got 3 assets for that one price. If there were no rules, the incentive would be for Dalai Lama to debit the whole $700,000 to land, because land doesn't depreciate as do buildings and equipment. So the rule, though, says no, that's not allowed. What you have to do is you have to allocate the cost, the $700,000 cost, based on the fair values of each of these assets had they been bought individually. Before a company would spend $700,000, it would have actually gotten appraised values of each of these assets individually. So in this example, this will be given to you, of course, they have the following fair values. So in other words, they would have paid $800,000 had they bought these individually. They got a price break, and that's not atypical when you buy more than one asset together. So the steps we need to go through now is figure out what percentage each one of these are to this total fair value, and then whatever that percentage is for each one of these individually, we'll multiply by the cost. Because again, in all of this, we can't credit cash for $800,000 and debit the assets for $100,000, $500,000, and $200,000 respectively. We're only paying, sorry, having trouble typing. We are only paying the $700,000. That's all we're going to credit cash for. So the total of these debits have to equal $700,000, not $800,000. So here we go. You take the cost of the land, or the fair value of the land, excuse me, and what we're going to do is divide it by the total fair value. And what I'm going to do is I'm going to put dollar signs before and after the 8. That way I can just copy the formula down. So in other words, this is 13%, which is 100,000 divided by the 800,000. Then I'm going to copy this down, because that formula then will give me this divided by this for 63,000 and this divided by this for 25,000. And I'm just going to prove that I did my math correctly, or my formulas are correct, by summing these all up, because it should equal the 100% of 800,000, and it does. Now, that means that 13% of the total cost should be debited to the land account. So here I'm going to write land. How much should go to the land? Well, here's my formula. I'm going to go equal, I hit the 13%, multiply it by my cost, and again I'm going to do dollar signs before and after, because that way it'll always multiply by 700,000 when I copy this down. So this will equal 87,500. The building, again these are all increases to your asset, the building is going to equal, and in this case I'm just going to do the formula, but I'm going to again do it's F4 that you can select to get the dollar signs in front of the signage, or in front of the B in the, or the cell I should say. So here we have the relative fair values of these assets. This sum should equal the 700,000, and sure enough it does. So my building will be the 437,500. Again, it's the relative fair value, that divided by that times my cost. And then the equipment, last but not least. And that is how you split the cost of the purchase price amongst the assets. Again, it's based on their relative fair market value, not their actual fair market value had they been bought individually. Just wanted to also say, in case I'd forgotten, I here standing for investing activities, because the payment of cash will go under the investing activity on the statement of cash flows. And that's it.